Good day, guys. Welcome to Forex Walker. Welcome to episode 78. Now, on this episode, we are talking about other currencies. We had to let go of the US dollar, and we are no longer buying the US dollar based on the economic reports that we have received. And at the moment, we are looking into currencies that are doing well. The RBA, the Reserve Bank of Australia, interest rate decisions. This is the 8th of December. Okay, today is the 18th of December, but here it says the 8th of December. They talked about the previous, which is 3.6%. They expected 3.6%. That means they were holding interest rates, and it happened as it was expected. So here it says the Reserve Bank of Australia anonymously kept the cash rate unchanged at 3.6%, third straight meeting. In its final policy decisions of 2025, in line with market estimates. That was the forecast that you saw over there. Maintaining borrowing costs at the lowest form possible. The central bank, okay, in this video, I don't have enough time to read everything else, but what is important is that we held interest rates from the 12th of August, 30th, September, 4th, November, December the 9th. We've been holding interest rates. That means the currency is good for buying. Now we can go long on this currency without any issues. What is this? This is inflation, and you can see that the inflation here, it dipped a little bit at 1.9%, and it kept rising at 3.8%. We don't see any slowdown in that inflation, and that means the currency will go long for a long time. And we're moving on to Switzerland. Now, in Switzerland, here we are having an interest rate hold, and the Swiss franc is the currency that we're supposed to be selling, and Australia is the currency that we're supposed to be buying. Now, Switzerland has its interest rates at 0%, and you can see they've been holding for a long time in the 0%. Now, this 0% is a problem. No Reserve Bank wants to deep into the negative territory of interest rates. So what happens is that when the interest rates are negative, when you put your money in the bank, it's being eaten. It's been eaten into that. Your money, interest are taken out of your money as it sits in the bank. So for every single day that it stays there, it has been eaten. So that is not a good idea. So the Reserve Bank here, let's hear what they say. The SNB, the Swiss National Bank, left its policy rate at 0%. In its final meeting for the year, maintained the 0.25 percentage point change on its side. Okay, in the future, they are thinking about that 0.25 percentage point charge on its size deposits above the set threshold. It also reaffirmed its readiness to intervene. Now, when Reserve Bank intervenes, what they do is that they stimulate the economy by printing more money. So that's a form of intervention, but other interventions are more stricter. But if they decide to print more money, they can also collapse the economy by printing more money, because the more they print money, the currency loses its buying power. But if they go into the negatives, they know that is not a good idea. It happened with uh, the JPY, and the JPY had to collapse for a long time because of the negative territory. So no one wants to go there. So here they're telling us about the benchmarks that are being expected in inflation. That means they will not introduce interest rate cuts if they meet those benchmarks. This is inflation at 0.2% for 2025, 0.3% for 2026, 0.6% for 2027. So we'll be watching out for this. If we get anything that goes below that, we know that hey, these guys are actually going to print more money if they don't get that. So this is the inflation rate. You can see it was at 0.2%. It went to the zeros, and they're expecting those 0.3. But if they tap into the negative territory, then we know that they will have to print more money and the currency will lose its strength. I apologize for speaking this fast, but I don't really have enough time for this video. And here we are switching on to the Canadian. Let me see. What is this? I'm switching on to the Canadian interest rates. Here it says Bank of Canada interest rates previously 2.45 basis points percent. They're expecting 2.25. They got the 2.25 basis points. So at the moment they're holding interest rates, and I'm not looking forward to uh, taking short trades anymore. I did hold shorts previously on the Canadian dollar, but for now I'm no longer looking for any shorts. So I had to rest my shorts. I had to liquidate my trades with short trades on Canada. So let's hear what they're saying here. The Bank of Canada held its target oversight rate at 2.25 basis points in December, keeping the bank rate at 2.50%. The deposit rate at 2.20%, and after signaling in October that the policy rate was about right. Not reading properly here. Uh, okay, growth upside 2.6% in the third quarter, while the labor market showed improvements as the unemployment rate fell to 6.5%. So everything that they're saying here is bullish. So I cannot hold any shorts on the Canadian dollar unless if you just go to CAD CHF and go long. That's the best way to deal with this baby. So this is AUD CHF. We are buying the AUD for holding interest rates, and the CHF uh, because they are in trouble. Their interest rates are at zero, and I'm expecting a turnaround from here. I'm expecting a turnaround. It might turn around here at the 50% peak and give us a rally. I believe the rally has to at least go all the way up there. Let me do my magic there. I'm expecting it to at least go all the way up there. Because the CHF is in trouble. Anybody who wants to take any trade with the CHF, whether it's a CAD CHF, whatever you're trying to hold, uh, I will advise you to sell the CHF. It is in huge trouble. So this is the AUD CAD. I had to liquidate this trade. We did make a little bit of money up here, but we had to liquidate because of the positive economic data that was coming in on the AUD CAT. Now, I was talking to you about instead of taking that trade that I was talking about, uh, I apologize for the time that I'm taking here. So instead of doing all of those things, you can actually take an CAD CHF trade that will continue doing its thing like that instead of doing all of these things that are confusing. So you don't need to sell the CAD. The CAD is actually giving us some bullish economic reports, and that means the currency is actually doing well. Even though market fundamentals were telling me to sell the currency, but because of the current economic reports coming in positive, we cannot do that. So let's look at our touches. We have three touches here, and we have a manipulation here. And these manipulations are actually telling you that, hey, my friend, you might as well look for longs and involving the bullish economic reports on the CAD. I was able to look into the 50% fib after that manipulation of this weekly time frame trend line, and I was actually able to hold the previous shoulder here, and we moved higher, and I'm expecting a rejection from the 50% fib here and a pump much higher than what we see here. So I'm expecting something like that. These are the trades that I'm holding, and any trade that has, whether it's USD CAD, it's not a good idea to take those trades, especially because CAD is holding interest rates. The US dollar is cutting interest rates. It's not a good idea to actually even get to think about the US dollar being a powerful economy. I'm telling you, the US economy at the moment, if they keep hiding the those economic reports with this government shutdown, I'm telling you, uh, the currency will keep doing what it's doing. It will go a little bit bullish, but if they show all of those economic reports, it will collapse. This is the Euro USD. I am a little bit reticent with this euro. I don't want any trade that involves the euro because the euro is actually exiting the recession. And here, this trade of euro USD says I should buy the US dollar and sell the euro, which is not a good idea. Actually, at the moment, I would rather take a euro CHF long instead of doing what I'm supposed to be doing. Even though my trading plan says I should take Euro USD short. If the US dollar would have not cut interest rates this December I would have held longs. But if we can wait for at least a month towards the end of this December, I might as well go short on Euro USD. But for now, I cannot hold any shorts on the Euro USD. My hands are tied, but the euro itself is a currency that you should be buying for this December. These are my economic expectations here on the Euro CHF. Instead of taking all of those things that you were thinking about, this is where you should go with Euro CHF. Buy it instead of selling it. There's the Euro AUD. Do you remember on that trade that I took on the Euro Turkish Lira when I was taking a trade on the tourist arrivals in Turkey? I said I do not trust the euro because the euro is providing us with a lot of bullish economic reports, and selling the euro is not a good idea. It will rather move sideways and bullish instead of collapsing. So previously, we were expecting the previous shoulders to be tapped into. They did not. The economic divergence with the AUD holding interest rates and the central banks rushing to hold the huge economy of Australia. We had our drop. This was the highest point. We went back to the 23%, 23.6 uh, percent fib here, 23.6% fib, and we kept on collapsing. And I'm expecting this to continue to drop lower and lower. These are my expectations, but with the euro doing what the euro is doing, I would rather take the AUD CHF instead. Thank you guys. I will see you on the next episode. Goodbye.